Welcome back to another market update, guys. It's Philip here from BlackBull Markets. Hope you all had a good weekend. Interesting things in the market. Now, we're still stuck in the zones we were in from last week, so I'll have a quick look at them. Obviously, Russia and Ukraine things are still escalating as we speak. So we'll have a look at the couple of pairs we'll be looking at, see what they're doing and how the market is being influenced. Now, obviously, looking here at gold, this is the 4-hourly time frame. We're still really stuck in the consolidation zone. We were speaking about this earlier. We're speaking about it being stuck around that 1900 mark zone. We're still hovering just above it. No moves yet. We actually did create on the side, if you guys do remember, we had this sort of smaller consolidation zone. We can see the support held out fairly well, 1882, but the resistance has now jumped a little bit higher. We did manage to kind of stay above this previous resistance, but we saw a little bit higher. We saw some highs being made kind of just below the closes and opens of these candles. We can see, I would say roughly about there 1920, right? But overall, we're still stuck in this 1900 mark zone, really struggling to break through. So again, we're looking for similar things. We're looking for the market to either break through, move further to the upside. Obviously, the high here, 1974, is a good target to look at if we do move further higher. To the downside, I'll show you guys a bit more in detail what we're looking at for potential moves further down. We'll zoom out a bit here, and so you guys can see, pop it over again. Now, we obviously have that support zone that's still being held, 1887, roughly, that I've got there on the 4-hourly time for now. If we do look at zones to go further lower, we obviously are sitting just sort of above that previous resistance that we've been held. So we will look for potential targets. Back down here, we can see roughly 1848 will be a good target as well. Now, if we do move further lower, we're starting to dip into major consolidation areas. We see lots of uncertainty in the market, lots of wicks formation. You know, this is a previous era where the market was uncertain of what's going to happen. Obviously, gold was sitting at a pretty major resistance when we did reach that. So if we go over to the daily term time frame, zoom it in a bit, we can see sort of exactly what we're talking about on that side. So I'll quickly make sure the market goes all the way to the front. There we go. So that's kind of that. This is that area that we were speaking about before. We can see there's where we're sitting, 1874 right there. And then obviously this is that zone that I was talking about, this sort of uncertainty for gold waiting to break it out, because we were sort of sitting roughly around the end where the market was pretty much on a major resistance zone. This is obviously that weekly resistance that we're talking about, was that spike. We could look for potential targets further high if gold does break above that I was mentioning before. But like I said, moving to the downside, we really want to be looking at these sort of zones. If I can get a pretty accurate, we can see 1841 would be a good place to look for the market to push down into. But like I mentioned, once we start going below the 1841 zone, we have a lot of consolidation, a lot of uncertainty in the market, and it could really give us some troublesome trades or troublesome moves in gold. Now, obviously, once we do clear this area, we do have some very nice lows to push further down. If we go below this, I've got it roughly here, 1763 mark zone. So if we drop further low than that, obviously, again, we need to start looking at the left to see where we have support/resistance zones. Now, again, another one I want to look at quickly for you guys is WTI. Obviously, oil is greatly being affected by what's going on in the world right now. We can see all across the boards we've been having these massive gaps to the upside. Markets are completely uncertain, completely dangerous. So what we need to start looking at is potentially not looking at holding trades over the weekend, because this can start to get fairly dangerous. Now, I'll give you guys a bit of an example right here, what we, potential reasons. You guys can see this is an extremely big gap. We see this across the board, but I'll use WTI for an example. What we could have had over here is obviously, we had a very nice sort of zone re-entry on this section right over here. We saw the market break past it, came to retest, obviously. So we could have looked at potentially taking sells, obviously with high stop losses just above the area, and maybe take profits. We could look at easily putting here down this low. Right, so that's a pretty reasonable trade, pretty nice trade. But now what happens, market closes over the weekend, that gap happens, and the market picks us up all the way back over here, and that's where it actually stops us out. So this could be a very dangerous situation for us to be in. So it's not really something we want to be looking into traders. Obviously, we are in very uncertain times, very difficult times in the world, so we really need to understand and adapt our strategy accordingly. Right, so one thing I'll be looking at is maybe not looking at holding trades over the weekend, purely because of reasons like this, because it does get more dangerous, and for a trader, that's what I'm looking for, is to protect my capital. Is the first thing we need to be looking at, is protecting that capital, because obviously without that capital we cannot trade. So that's what we need to look at. But quickly update here on the WTI. Again, we're looking at the hourly term time frame, and we can see we have really sort of struggled. So if we do look at what the market really does look like, obviously we've got the nice moves and we've got that spike to the upside. So that's really kind of what we're seeing in the market. If I want to add that candle in there for you guys. So currently speaking, we do sort of have a bit of a pattern structure that's playing out here, which we could potentially be using for the market to look for moves further higher. Obviously, oil is going to get more scarce, and people want it more and more and more, which will obviously drive the price further higher. So we can potentially see the market pushing further higher, using this pattern to break out of there, and obviously targets I'll be looking for. Obviously, we can see just above 99 a barrel, or we can even look at pushing it further to 100. Obviously, if we know what's driving behind all of that, could be a reasonable price to look at. But if we want to play it safe, make sure as traders we want to be playing it safe. We don't always really want to be optimistic. We want to be more realistic about what's going on, right? So we can look for that 99.3 mark zone that I've got charted there, wherever you guys seeing your resistance. Now, if we again as traders, we need to look at the other side of the picture as well. We can't always just be completely one-sided biased, because if we are biased to one side and the trade takes us out, we're going to be continuously trying to pick up on that trade. We're going to be taking worse and worse trades. So we need to always look at the other side of the picture. If we're wrong, how can we adapt and what can we change, right? So obviously this is that sort of pattern we have over here. We've got the initially sort of the big candle that pushes to the upside, what we're seeing. And so if this market does continue on within this channel, we could easily look for moves to the downside. Now again, targets we could potentially be looking for would be this wick zone right over here, which could actually give us a nice, actually I'll draw it in the blue, it could actually give us a very nice head and shoulders pattern that could play out, right? And we could start looking again for moves further higher, because we do have a fairly strong support coming up here. Again, $90 a barrel. It's a very big psychological zone that we need to be looking at. So if the market does reject on here, we could potentially be looking for buys or any moves to the upside. Targets could potentially be looking at this $94 a barrel target, and obviously then we start to dip into uncertainty and consolidation again. Above that, we can start looking again, like I mentioned, that pattern break, looking for moves further higher. Right, another one, last one I'll be looking at again. I want to be covering EURUSD, because obviously the US is fairly involved in this. So let's have a quick look at what the EURUSD is doing. So hourly term time frame. We can see here, EURUSD, similar thing happened. We've got this big gap to the downside. Let's have a quick look here. Similar thing could have happened, right? We could have maybe taken a buy, right? Because of the break of the high, targets could have been up here somewhere. You could see we just fell short of that target. Then obviously, stop losses could have maybe been below the zone. And look at where the market actually gapped up. So this right over here is how much extra you would have lost if the market gapped you further down. So this is why it's very dangerous during this time. It's why just want to make you guys aware of it. I'm very aware of it, what's going on. So I wouldn't really be looking at, really holding trades over the weekend, because it can be extremely dangerous. I mean, you could have been almost at your take profit target and the market completely took everything away plus more that you were willing to risk. Okay, even if you had your stop loss, even if you took an entry and moved your stop loss to break even to protect yourself, it still would have taken you out right over there, which is extremely bad. Okay, and this is happening all across any market we're seeing. These gaps are very present across whatever platform you're trading on. Okay, now for the analysis for EURUSD hourly time frame, we have this nice sort of, we're starting to look at a bit of a wedge coming up. Now we keep in mind that this was actually just a, essentially a big candle to the downside. So that's really what we're seeing right over here. It's just a big, massive move to the downside. And we're starting to see a very similar thing to what we're seeing with WTI. We're seeing this pattern. So if we do break further to the low side, we have some nice lows to come play in. I've got here 1.110. Again, that's a psychological level we're talking about last time, potential targets for the market to go to. For the upside, guys, really there's a lot of traffic coming up. There's not really a lot of space for us to trade into if the market does break further higher. We've got some consolidation coming up even closer. Even if we dip into the zone over here, we can see it's a very, very messy, uncertain market. There's not really anything ideal or any clean space for it to move into. So we might have to pop it over to the higher term time frames before we do have a look to see what's going on. So for hourly time frame, we can see it's a very strong move to the downside. Market is still very, very strong to the downside. But also remember, if you guys have watched the previous video, we were talking about this double bottom that's been struck. Right, so we have seen that we were sort of moving, when we were talking about last week, we were moving to the upside. We saw this nice candle close, stop down below here. So we could have potentially still been in this trade, but it actually did give us, with that gap, with that re-entry, the market did give us this nice opportunity to potentially to get back in. It's a very dangerous time to get back in, because obviously it's an uncertain time in the market. But we did eventually fill that gap which could have been a nice trade. If you guys aren't familiar with gap trading, it is a very common practice with stocks, and now we're seeing the forex market create big gaps, and they all react the similar way, right? All we're seeing here on the market is mass psychology, and people tend to react in similar ways in groups. And anyway, so gap opened, nice big close, very easily. You know, I believe we're here, you know, the second day of the week, and we already closed that gap. So it's very nice, very clean. Okay, now let's have a look to potentially see, like I said, high term time frames. We want to see what we could be looking for the future in EURUSD. So obviously we've got that stop. Now I believe that there's already been a missed opportunity. This was our target that we're looking for. You know, you really wanted to get back in down below here for the market to move further higher. Now if you want to look for moves further to the upside, really you want to be looking at closes above the 1.13777 mark zone that I've got here, so that'll be ideal, and we can kind of look to start moving a little bit higher to those tops, keeping in mind it is a very dangerous territory to trade in. You can even perhaps look at trading in here on the shorter term time frames, but again, very dangerous territory to trade in, right? Lots of uncertainty in the market, lots of consolidation. Could be a difficult place to play in. Even right here, right now as we speak, where the market is moving, it is a very uncertain area. It's the start of a potentially new trend. We've had this big downtrend. If you guys are familiar with Elliott Wave, we could potentially be having A, B, and C over here. So a nice zigzag. You know, we did just take out that low, so we could potentially be looking at a flat, where we also have, you know, we've got waves A, B, and C somewhere up here. You know, we could potentially be looking at a sort of flat structure where the market is, you know, going to be consolidating in these higher time zones. So if we have a look here on the daily term time frame for the last little bit here on EURUSD, actually let's just keep it on the 4 hour. I'll just zoom out for you guys. We can see we do have these two big zones that we're really trading in right now. So there's our bottom zone, 1.11, and we have our top zone, right? So as swing traders, if you guys are interested in swing trading, really, we want to be trading from zone to zone. So I believe it's already been missed. I mean, if you guys are interested in looking for moves further higher, it's a fairly big zone to be risking in. You know, the reward is not really that great for such a big trade. Ideally, we want to be getting in, you know, somewhere roughly along the lines of, like we have over here. We can see there could have been a good place to get into, and obviously targets would have been, you know, you can see the risk reward here is much larger than we have, you know, right over there. So let's see what we have, guys. That's it for the update. If you guys have any questions, definitely let us know. We'll be happy to answer those for you. If there any analysis you want to see throughout the week, let us know. We'll be doing this every day of the week until further notice, guys. Stay tuned. From everyone here at BlackBull Markets. Trade safe.